Welcome to buysilver.org's weekly review. And what a week it was last week, pretty momentous. Today we're going to try and explain exactly what's going on in the markets. For those watchers of silver, you'll have seen it collapse last week, and we need to understand exactly why this happened. And to do so, we're going to take a much broader look at this last week and the markets in general. So let's start by reviewing the major announcements last week and the points of relevance. Well, we started last week with continuing Eurozone concerns pushing equity markets a little bit lower. The IMF downgraded global growth forecast from 4.3 to 4%. It also warned that, as Lagarde put it, the world is entering a dangerous phase. The IMF stated its belief that central banks now have less firepower to promote growth than at the height of the crisis in 2008. They also said that they see that there's a three-pronged debt problem now. The banks, sovereign country debt, and high levels of personal debt, particularly in the advanced economies, US, Europe. Standard & Poor's continued its examination of countries and downgraded Italy's debt from A+ to A. Perhaps no real surprise. And finally, the US Fed announced its twist operation to stimulate economic growth. Well, what is Operation Twist? Let's have a closer look. An Operation Twist works very simply. The Fed sells short-dated treasuries now to raise $400 billion, and then it will buy longer-dated treasuries in June 2012, around about 8 or 9 months away. It's raising money to pump into the economy now, and then to repay that in 2012 and short-dated beyond, up to 5 years, when the money it's pumped in has translated into tax revenues. In other words, there's more borrowing. So how did the markets take this news? Certainly not as the Fed would have expected. Let's have a look first at world equity markets. Everything red, from the Far East to the USA, between 3 and 10% down. There wasn't a single equity market last week that rose. What about commodities? We saw wheat drop, soybeans drop, orange juice, crude oil, all down by around about 5 to 10%. Why? Not just Operation Twist, but also the IMF downgrade of global growth. Less growth, less demand, lower prices. Metals, we don't really need to say very much about metals. Gold and platinum down 8.5%, 11 and 11% respectively. Silver a whopping 22% down. Why so much harder hit? Well, two reasons. First of all, it hasn't had the size of retraction from recent highs that gold had already seen. But also, silver's a more industrial metal than gold and platinum. So therefore, it's been hit harder with the lower global growth forecasts. Finally, treasuries. Well, short-dated treasuries, the ones that the Fed are going to be selling to raise money, they're down a smidgen. But the longer-dated, they're up. The only bright spot around the world last week, 30-year treasuries and the other long-dated treasuries are up. Why? People are buying now because there's a guaranteed buyer in less than a year. The Treasury, in effect, the Fed, in effect, are giving people a guaranteed out. So, how does this look for the silver price? How did the silver price end last week? Well, let's have a look at the week's view first, before we look at the longer dated. And here we see it. First 2 or 3 days, fairly stable, 39 to 40.5, round about that level, not much movement. Fed makes this big twist operation announcement, everything's hit, and that includes silver. Silver dropped a massive 22% last week. Why so hard? Well, let's have a look at the technical 12-month view now. What's happened over the last year? We've been talking for the last few weeks of this rising channel. You will see it here, left to right, the rising line of support and the rising line of resistance in blue. We said last week, if we held that line, if we held that channel, we saw good prospect for the move up towards 50 late November. We also said that a break below that line of support would indicate short-term a downdraft, a short-term bear market, and this is exactly what we're seeing. Volatility has returned to silver. We saw the move pushed down by investors taking their profits ahead of the quarter end. Investors taking profits in silver, pushing the market lower. There's this big gap there. Next line of support around about $25 to $27, where we think we could see quite a hard bounce. How hard and how high and how fast that bounce is remains to be seen, but we're still confident of a return to that rising channel. Just as we returned from the upside, we think we'll return from the downside. So this we see as a buying opportunity in silver. Harsh reality check maybe, but still perhaps good health check for the future. So here from us at buysilver.org, thank you very much for coming along and watching this latest weekly review in video. Please do visit our website www.buysilver.org to find the latest information on silver, silver investments, silver instruments, and the latest coins, old and new. Thanks once more, and we'll see you next week. Bye for now.